Time now for the business roundup, and Stephen Carroll joins me now in the studio. Hello again, Stephen.
Hi, Rochelle.
And you've been looking in more detail at that statement from British Finance Minister George Osborne.
The message from Mr Osborne is that his ministry was prepared for this result and that there are strong contingency plans in place. He says he's been in touch over the weekend with the Governor of the Bank of England as well as his European counterparts. Now, in the run-up to the referendum, the Finance Minister had warned that a vote to leave would mean an emergency budget with £30 billion worth of tax rises and spending cuts. That claim had been strongly criticised as scaremongering by the Remain campaign, but George Osborne said today that there would have to be big changes to public spending.
There will be an adjustment in our economy because of the decision that the British people have taken. I respect that decision, and we're going to get on and deliver on that decision. But that impact on our economy will have an impact on our public finances. Given the delay in triggering Article 50, given the decision by the Prime Minister to hand over to a successor, I think it's perfectly sensible to wait for a new Prime Minister before we determine what that action is.
And Stephen, has Osborne speaking out, has that had any effect on the currency markets?
We have seen a slight improvement in the pound against the dollar in trading today. Of course, we had that huge slump on Friday once the results were announced, the pound hitting a 31-year low against the dollar. It had been down more than 2% against the dollar earlier. As you can see, those losses slightly receding after those comments by George Osborne, down about 1.75% now against the euro. Picture largely unchanged, still down by about 1.2%. Let's try and put those drops in context for you. Just last Thursday, the sterling was trading at $1.49, fell, as I said, to that 11-year low back on Friday, and falls again today, putting it at 1.34. Now, you'd have to go back decades to find a time when sterling was last this low, but it could go even lower. We've had warnings from several banks that sterling could go as low as $1.20 by the end of the year. There's a potential silver lining in this. Cheaper sterling means that for British exporters, their goods become cheaper abroad. Of course, it's bad news, though, those countries that sell goods to the United Kingdom, because their goods become more expensive.
Indeed. Well, what about the stock markets?
It does seem like, again, George Osborne has had a bit of an effect on the stock market opening. We had been expecting falls of around 3% at the open, but this is how things did open, in the red, but not by as much, and certainly nowhere near those dramatic falls that we saw in trading on Friday. In London, banks again being hard hit. Barclays down by about 3%. The retailers are all down as well. The low-cost airline EasyJet warned earlier today that the Brexit referendum result would have a big effect on their profits. Their shares down by nearly 10% in London today. Over in Asia, we had some of the Brexit hangover on the markets there as well. We had falls on the Hang Seng in Hong Kong, and as well earlier on the Kospi in Seoul. The things had recovered there slightly since. We saw some gains though in Shanghai and also on the Nikkei in Tokyo. Now that's somewhat of what we can call a dead cat bounce effect. We had a sharp fall on Japanese shares on Friday, so things just giving some point of a recovery there. Now, Japan has been particularly hard hit by the market turmoil over Brexit. That's connected to its currency, the yen, which rose sharply in value as investors fled European currencies. That move, of course, hurting Japanese exporters, though, and threatening to derail the economic recovery. Fernand Rantet reports.
The effects of Brexit are being felt as far afield as Tokyo. Japan's yen soared as investors, spooked by volatility in European markets, sought refuge in the Japanese currency. It's a setback for Prime Minister Shinzo Abe, who the past 3 years has aimed to weaken the yen to boost exports and grow the economy. Abe hinted the Japanese central bank was ready to intervene if necessary.
I'd like to ask Minister Taro Aso to watch the currency markets even more closely in cooperation with the Bank of Japan. I also want him to closely communicate with other G7 countries to take necessary steps for the economy and the financial market.
Concerns are not just limited to the yen. Over 1,000 Japanese companies operate in the UK, employing 140,000 people. Japan's foreign minister called a meeting with the British ambassador about their future.
I urge you to please make every effort to ensure that the many Japanese companies that have based themselves in the United Kingdom, which was supposed to be the gateway to Europe, please ensure that they can continue to operate as usual and in a stable environment.
The Brexit uncertainty comes at a particularly sensitive time, with Japan's economy fragile and burdened by giant government debt. A proposed increase in sales tax was delayed earlier this month, as the last such increase in 2014 led to the country falling into recession.
Well, Stephen, in times of market turmoil, there's always someone who benefits.
Yeah, we talk about safe haven assets as people tend to put their money when things are as uncertain as they are now. The classic of those is gold, and we've seen, perhaps unsurprisingly, the price of gold rising sharply. Today it's up by about 0.8% at a 2-year high of over $1,326 an ounce. It was up by almost 5% on Friday at the height of the market turmoil. Something solid people like to hold in their hands in times of trouble. So the gold giving them something, a bit of comfort.
Oh, lots of comfort. Diamonds, gold,
Yeah.
All a girl's best friend, aren't they? Right, Stephen, thanks very much for that. Stephen Carroll with the Business Roundup.